Imagine this. You have just landed your dream job as a doctor in the UK, very excited to start your new career, but then the first payslip arrives with a hefty tax deduction. Don't worry, you are not alone in this. As an Indian doctor navigating the UK tax system, I know the confusion can be overwhelming. Today, I am going to demystify the UK tax system for anyone who have made the big leap to the UK from another country. It's a whole new world of new tax codes, allowances, and deductions, and I'm here to navigate you through it with ease. I will talk about how to keep more of your hard earned money in your pocket and the nuances that are specific to us in the medical profession in the UK. Just a heads up, I am not a financial advisor, so please consider this as a friendly guide and a starting point of your own research. For tailored tax advice, always consult a tax advisor or financial expert. Let's start with the basics about UK tax system. The UK tax year starts on April 6th and ending on April 5th of the following year. I am making this video in February 2024, so we are currently in 2023-24 tax year, which means any tax related actions we take need to align with this particular tax year. Now, if you are wondering what is the income tax, this is the chunk of your salary that goes to the government. The amount depends on how much you earn, but there is a silver lining. A portion of your income is tax free, known as the personal tax allowance. I will cover this in detail later in this video. Along with tax, there will be another deduction in your payslip known as the national insurance. Think of this as your contribution to the UK's social security system, covering state pensions and other social benefits. It's conveniently deducted from your salary, so it's one less thing to worry about. On your payslip, you might also see another term called PAYE, PAY and E, standing for pay as you earn. This system ensures your income tax and national insurance contributions are automatically deducted by your employer. So your take home pay is what's left after all these deductions. When it comes to UK's tax system, the personal allowance is a crucial factor. Let me break it down for you. The standard personal allowance for the current tax year, that is from April 2023 to 5th April 2024, is £12,570. This means that you can earn up to this amount without paying any income tax in the UK. So what are the different tax brackets in the UK? If you are earning between £12,570 to £50,270, you are in the 20% tax bracket, also known as the basic rate of tax. Earnings between £50,271 and £125,140 fall into the 40% tax bracket, also known as the higher rate tax bracket. For the high earners earning more than £125,140, the tax rate jumps to 45%, also known as additional rate tax bracket. Another important point to note here is about the tapering of personal allowance, which means for every £2 of adjusted net income above £100,000, your personal allowance decreases by £1. When your income reaches £125,140 or above, your personal allowance becomes zero. In real terms, this means that for every £100 of income between £100,000 to £125,140, you only get to take £40 home. £40 is deducted in income tax, while another £20 is lost by tapering of the personal allowance. This amounts to a 60% effective tax rate. So be very careful once your income crosses more than £100,000. If you fall into this category, you will need to file self-assessment tax return every year. Navigating taxes can be complex, but with these strategies, you can make it work in your favor. I will cover 5 key areas with detailed steps to maximize your savings. This list is not exhaustive. I've only covered 5 key strategies to save your taxes. If you want a more detailed video on how you can save taxes, then please do let me know in the comment section below, and I'm going to make a detailed video on this topic. To save taxes, the first thing that you should do as a doctor is claim for all professional expenses as a tax rebate. You are entitled to rebates on professional expenses like GMC fees, indemnity fees, and BMA membership, and many more. I have done a separate video demonstrating how to claim for this professional fees. Please do check it out. I have provided the link in the description box below. Secondly, check your tax code. It's crucial, especially with frequent job rotations as a trainee, and also if you're doing locums in different hospitals and having different bank assignment numbers. A wrong tax code could mean overpaying your tax. Correct it online through the HMRC personal tax account and ensure you are not giving away extra pounds to the taxman. Another important strategy to save your taxes, particularly for married couples, is the marriage tax allowance. The marriage tax allowance in the UK allows one partner in a marriage or civil partnership to transfer £1,260 of their personal tax-free allowance to the other partner. To qualify, you must be married or in a civil partnership. The lower earner must have an income below their personal allowance, which is usually £12,570. The higher earner must pay income tax at the basic rate. So this will be applicable to any junior doctors who are likely F1, F2 or ST1 or even ST2 pay grade if they are not doing any extra locums. The non-taxpayer would transfer money to the basic rate taxpayer and would save up to £250 on their own tax bill. You may apply online through the HMRC website for this. For parents in the UK, the government offers a tax-free childcare scheme where for every £8 you pay into your childcare account, the government will add £2 additional money. You could save up to £2,000 per child annually. You will need a childcare account on the gov.uk website and pay for the childcare arrangement through this account. It's a helpful support to manage those nursery and childminders bills, which could be a lot. Lastly, consider your pension contributions. They are not just for retirement, they can also lower your taxable income now. With the NHS pension scheme, you can plan for the future while saving on today's taxes. If you need additional pension contribution, then SIPP is another option for private pension. Tax planning is more than just a yearly mundane task. It's a strategic move, especially if you are earning over £100,000. Don't let your personal allowance slip away due to lack of planning. I have only included some of the tax savings measures, but there are many other strategies out there to help you save taxes. Investment in an ISA is one of them. Please do check out this video about ISA accounts in the UK and how it can save you taxes. Thank you for watching this video. See you next time.